Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on euro currency. So markets are coming back after the holidays, so activity is gradually returning back, although on euro currency still no clarity, but a few things that point on well, some weakness on the market. It's just because the performance that we see on intraday charts, it's a bit not quite natural to the performance that it should be when you're dealing with some bullish pattern. On the daily chart, mostly market keeps the bullish sentiment. It stands inside of the consolidation that we talked about yesterday and previously in the previous week. This is a kind of the pennant or wage pattern, something of that sort. And actually performance inside of it brings no impact on the daily picture, so it still remains bullish until market stands inside of it. But for us, since we consider the point where theoretically market could start upward action based on this performance, this thrusting action, it's very important. And we have monitoring recently a few levels and the patterns that theoretically is becoming the key to understand the overall situation. And once again today we have some important signs on the hourly chart. On the 4-hour time frame chart, take a look. The grabber that has been formed yesterday that we talked about, it's one of the patterns that you could keep an eye on, actually has brought no effect, as you can see, just market just dropped lower. Currently market is forming some kind of the bullish reversal candle, but in the current circumstances I wouldn't say that it's really decisive moment, just because here we could get within the few hours even opposite pattern, I mean bearish grabber. Let's just drop below these lows and probable downward continuation. Although theoretically market still keeps bullish context on lower time frame and hasn't brought yet the vital area that we talked about, it's 1.875, 1.880. It's actually the shoulder of the hand shoulders pattern on the hourly chart. As we said, while market stands above it, you theoretically could try to take a position with it, and in general it brings really nice swings here. So if you have taken position somewhere here, you can see this was first action, now it's second action, so at least it's time to protect the position with the break-even stop. But in general, on this performance I do not like it. Why? Because we have really sharp reversals. Take a look, great downward action and sharp upward action. This is great for the bullish pattern. But after this action, take a look what has happened. Market was not able to immediately to proceed higher and just forming this harmonic head and shoulders pattern, and it's just proceed higher, strong action. But instead of that, it has tested neckline once, dropped right back down, and take a look, it creates the new lows. So in fact the ABCD pattern that we have discussed yesterday now is not valid anymore. So here, as you can see, I put the cross mark right there, so it means that the C point that was standing here is destroyed right now. So now it is right there, and correspondingly the B point is also not here, but it's moved to this level. We do not need this ABCD pattern. I just talked about this just because to explain you why this is not normal performance for the bullish market. It's a bit heavy, and this fact that market was not able to hold initial ABCD shape after strong upward action, creating the new lows and erasing initial ABCD pattern. This is bad. This is not good. Although theoretically we do not have any breakout of the major level. Theoretically this scenario is still valid, but there are more and more signs appearing that probably it could not be valid within the few hours. So it theoretically might be the downward breakout. So that's why in the current circumstances, with this information, I wouldn't consider taking any new long position by far. So if you have taken position somewhere around the bottom of the right arm, so theoretically you could try to sit with this position right to the end if you have the break-even stop, just see what will happen, because today we will get the Fed minutes protocol, so maybe it could change the overall situation if it will be estimated that Fed is more dovish than market suggests. In this case, we could get some upward breakouts. But in the current circumstance, with this pure technical, based on purely on the technical background, market looks weak, and I'm currently thinking that chances on the downside breakout looks more preferable. If this will happen on a 4-hour time frame chart, I do not know whether we will get grabber or not. This market will stay here for another candle. But in this case, we could get right the OP that we initially considered. And as we said, despite this action, OP still might be reached, just because when you're dealing with a larger scale EBCD, the swings and retracements also could be larger. And despite that, on Friday it was really great pullbacks. We called for taking the position, close position right there before the weekend. Now overall situation shows that the performance of the ABCD is not over yet, so theoretically market still could reach the OP. So here are some nuances that you should know, and based on this, probably maybe to be useful to you when you today will start creating your trading plan. So that's actually what we have on euro currency.